What a week it's been for crypto. We went all the way down to $49,000 on Monday, and within the space of a week, we're all the way back now to $61,700. So a pretty big move, and crypto looks to be doing a V-shaped recovery. The question many of you may be asking yourselves is, if you panic sold at the bottom, what you should be doing next? And if you're sitting on the sidelines in cash, should you be deploying now or waiting for range to form and price to come back lower? One thing's for sure, a lot of people have been trapped in this market, and they're probably going to continue to get trapped. So we have a whole lot to discuss in today's show. Please make sure to smash the like button, hit the bell notification, and then subscribe to the channel, and we'll get straight into the show content. Banter bubbles over here, absolutely cooking on the daily time frame, with the majority of coins pumping towards the upside over there. And if you look at the hourly as well, trying to make a little bit of a resurgence following an early morning dip. When I woke up, at least here in Dubai time, prices were turning red, but starting to pick back up. So there is a whole lot that we need to look at. Weekly gains still down, which theoretically would still mean it's a pretty good value area. If you were looking to get in, you'd still be getting in for less than last week. And then if you were holding and you were deeply underwater, you also may be wondering, well, is this actually the point that you need to be exiting? So a lot to discuss in today's show. Let's get straight into it. And I want to start to first build a little bit of a longer term macro bias. We'll look at the traditional markets and everything that's happened with this whole yen trade unwinding. And then we'll look at what that means for crypto, the 18.6-year real estate cycle, and what you can expect in the short to medium time frame for crypto. And then, of course, we'll dabble in the meme coin sector, because a lot has happened there as well. So again, guys, smash the like button and let's get into it. So big things happening in the macro space, at least when it comes to crypto as well, right? So if you look over here from 𝗕𝗬𝗕𝗦𝗧, Putin now signs both crypto laws, and you can see over here he signed them today, legalizing cryptocurrency mining. So the mining sector coming in hot over here from November the 1st, 2024. They're entering into that race. I'll show you what it looks like when you look at the various different nation states as well, and the diversification of where those crypto miners lie. Cross-border settlements and exchange trading in digital currency was also recently approved and written into law, and that's of course got a lot to do with their sanctions. And this is what crypto is created for, right? Freedom of movement. That's one of the big benefits. Now, if you look at the mining pool dominance by country, well, you can see that China is a major outlier over there, with USA coming in slightly below. So as 𝗕𝗫𝗄𝗎 says over here, Russia seems to be acting to keep up with the US nation level. Bitcoin FOMO is heating up, right? So it's kind of like the space race, but this is the Bitcoin race right now between currency or countries trying to get into Bitcoin. And he says over here, their entry will boost the hash rate, strengthen network fundamentals, and diversify miner politics. Chinese mining pools control 57% of the BTC hash rate, whilst the USA has that 35%. So this is all good things, usually for the longer term, right? To diversify the network and ultimately to increase the hash rate. As hash rate goes up, price tends to follow. And remember, we did look at that Bitcoin hash rate blue buy signal. Remind me in the show when we get to that chart to also look at that again, because we need to reevaluate that, the invalidation of that signal, right? But you can look at a different time frame and we'll see, is it still valid? So stay until the very end. Also, if you look at how big this whole yen carry trade is, well, this is from 𝗕𝗫𝗖𝗕𝗓 over here, showing actually a report from the Deutsche Bank, how big this trade is. Actually, it amounts to a whopping 20 trillion, which is 505% of the Japanese GDP. And that's based on Japan's government balance sheet, looking at the assets and liabilities mix. This is absolutely enormous if this unwinds. So it's no surprise that they're tapering off a little bit on the interest rate hikes and trying to slow things down, because this would be pretty catastrophic if it did unwind, and probably eventually it will unwind eventually. But we are basing our bias on the 18.6-year cycle, and therefore we don't think it will happen yet. So you can see the Nikkei 225, which obviously had that pullback, and I told everyone not to panic because you're coming into an upsloping trend line over here, strong horizontal levels of support, and you started to get that bounce. And if you go into the weekly time frame and zoom in, it's really starting to look similar to crypto's weekly candles. candles, right? Very, very correlated over there, almost flipping green and bullish with a massive pin bar candle over here, showing a strong sign of reversal within the markets. We've also been looking at the hammer coming down into the DXY, breaking it down below these key levels, and this will help us to form our longer term bias. If this can break down and gain acceptance below the gray box, which is below 103 on the DXY, well, that should bode very, very well for crypto assets to rally, as well as the rest of the risk on markets. And that's why you're starting to see now, right? Nasdaq pushing towards the upside, Dow Jones also coming back up. We looked at a major bottom forming over here around the $200 region for Coinbase, and then of course we have the S&P 500 futures on the top left over here, coming almost all the way into that 200-week moving average and bouncing off that. The pink boxes denote major support. So even if you were to come a little bit lower on the Nasdaq and the S&P 500, there is major support. For me personally, this was good enough to at least put on a small trade to have a little bit of exposure in the game. So I did actually take over here along on the S&P 500 pretty much right before the show started. So if you do want to follow along with that, I'm trading the MACD over here, crossing back towards the upside, as well as everything else that we're seeing over here. This is on Prime XBT, which is a crypto-friendly exchange that also caters towards forex pairs, commodities, as well as the stock market. So there's a link in the description below. You can claim your sign-up bonus, 20% on top of whatever you deposit. And if you want the trading commission, just select that one over there. Use the link below, sign up. That is Prime XBT. All right. Bitcoin on the monthly chart pushing towards the upside. Look at that monthly candle. Imagine this does start to close the monthly green, how bullish that will look for continuation. Then you can consider this a major shakeout within the market, the bear trap before continuing higher. And remember, we're building up bias in alignment with that 18.6-year real estate cycle, which would have started in 2011. And we're looking for the end of that cycle to take place at some point between 2025 and 26, whereby you will go into a catastrophic Great Depression, bear market, recession, whatever it is you want to label it, all the way into 2029, potentially 2030, which just so happens to line up with Charles Schwab's Great Reset. Literally wrote a book about that. So if any of you care to go read about that, feel free to. But it's amazing the way these cycles all line up. The point is right now, we're looking at the winner's curse phase, which is rapid acceleration towards the upside into those blow off top peaks, which means that when you have these dips and corrections, you expect that they should be shallow and very, very quickly absorbed towards the upside. So if the thesis is correct, there's a whole lot of important information that we need to look at in alignment with everything that I just showed you with the Japanese essentially yen trade. If it did unfold, those trillions, $20 trillion that will start to unwind, that is likely to occur at the peak of this bubble, and that's what helps for these absolutely catastrophic crashes towards the downside and those Great Depression kind of vibes, right? So we're looking at that. We've also been looking at the M2 money supply, which if you overlay that over the course of the cycle starting at 2011, you can see it's been nothing but up only, and at certain points in time it goes a little bit more aggressive, and then you lead to those periods where you get those dips like we did over here, where the M2 money supply does taper off and slowly come down. We've been showcasing over the course of about a week, actually multiple weeks, how they wrap these complex jargon and terminology, which ultimately simply states that it's quantitative easing, where the M2 money supply should be increasing towards the upside. And we're seeing that right over here, right? You got this over here, essentially 100 million worth of liquidity injected yesterday into the market. So big movements of funds coming back into the market over here. And this is the overnight repurchase agreement, Treasury Secretary purchased by the Federal Reserve, right? So the Fed buying back in terms of the market, right? They're buying treasuries over there. And this is also what's helped towards getting price towards the upside. But Bitcoin bulls are not completely out of the woods yet. There is a whole lot that needs to happen over here, right? We need to reclaim, most notably above the 21-week exponential moving average, which we're coming into right now as resistance. And that's going to be $61,800-ish. Get back and close this candle above there, and the whole picture really begins to change. Now, we would expect that this will take a little bit of time to unfold, possibly another 2 to 3 weeks before we see acceptance gained above these levels. And if not, at the very least, there's going to be a little bit of chop around this area. So I'll give you a little bit of a visual of what's happened the previous times. If you go on to Benjamin Cowan's tool over here, which is essentially just taking the 20-week simple moving average and combining with the 21-week exponential moving average, which is the one that I look at over here. Generally, if price is above this and it's angled upwards, it's been good and it's a bull market. If it's angled down, so sloping towards the downside and price is capped below, generally that's bad. But you need to use context, right? Where are we within those cyclical processes? Well, we believe that we're here, which means that the buy slightly shifts towards losing that as temporary traps, which are designed to shake people out of the market. But nevertheless, we need to look at those key levels. And right now, we're coming into that bull market support band as it is as resistance. Now, you can reset the zoom over here, and you can see that this did actually happen already once within the cycle. It was down here. We temporarily lost that. And if you go back to any of my videos during this time period, this was during August of 2023. So ironically, exactly 1 year ago, go back to any of my YouTube videos over there, you'll hear me beating the bullish drum, saying that I'm not going to get shaken out. We're holding a strong range low level, and the lack of bear's ability to break down that range low suggests to me that it's probably going to be a bear trap continuation higher, and we reclaim the bull market support band towards October, which is where the stock market also put in its major low in 2023. And that was actually the last time that I put on the long trade as well on the S&P 500 and NASDAQ chart. And we went straight up, right? Straight up after that. I think that this time could be very, very similar. You might have a little bit of continued chop, but ultimately, as long as you hold that key range low level, it should be good for continuation higher at a later stage. And it's been a major sentiment reset within the market, right? We have seen this happen previously, right? We've seen it previously where you temporarily lose it. But if you look at these prior cycles, it's very, very short-lived, right? For the most part, it leads onwards and upwards. So very key level to reclaim is the point, right? If you're somebody out there that wants to remain safe and you would rather lose, some of the meat on the bone by waiting for price to get up higher, then the key level to reclaim over here is simply going to be above that $62,000 region. If you can start to close above that, you'll be reclaiming this bull market support band, and then you can look at higher prices. So we've been in this correction for over 5 months now. It's 148 days, and from top to bottom, it's been 33% as a correction, totally within the realm of normality. So from a timing perspective, we said on the further end, we're looking at about 6 months. On the closer end, we're looking at about 4 months for this correction. Now we're 5 months in, we've got a couple of weeks left, and the 6-month period should be complete. And then we're looking for price to track onwards and upwards. Now, there is still a possibility, if you actually measure this out in terms of weeks and a word to follow this trajectory, well, 3 more weeks and you'll start to reach the neckline of this inverse head and shoulders formation. Remember, you have here the left shoulder, you have the head, and then you have the right shoulder. And this is why it's important to look at the weekly time frame to help to form your bias, right? This has not been invalidated yet, despite the massive wick that we had down to $49,000. I told you, remain patient, wait for the weekly close. The best thing that could happen would be to have a close anywhere between about $57,000 and $60,000. And then we got that, right? We got the close over here at $58,000 for Bitcoin. Now I would actually like to see Bitcoin close this week at about $62,000. If we see a Bitcoin close at $62,000, you'll be reclaiming the 21 EMA, the bull market support band, and you will not be moving up too quickly to the point where the move will get faded. And that could mean that you could slowly grind up over the next 3 weeks to approach the neckline of this inverse head and shoulders whilst on low volatility, and then potentially lead to a big bad breakout. And if you get that breakout above the neckline, the measured move of that will take you all the way up to about $80,000, right? So there is still hope that's alive here for the bulls. And this is part of the trap scenario, right? You don't want to get shaken out of your positions too early. I know many, many people capitulated onto that wick low, right? If we move it onto the candle chart, better seen over there. I know many, many people capitulated over here. And usually the market will leave those people behind. If this is in fact going to be a bullish move, there won't be that many opportunities to get back in. So a lot to look at, right? A lot to look at over there. Upside liquidity is also at the neckline over there at $70,000. We have $1.48 billion worth of liquidity. Remember, on that downward move to $49,000, we liquidated $1 billion worth of traders, right? So most of it was on the long side. About 1/10 of that was on the short side, trying to short the move when it had already completed. And then you started to V-shape out of there. So if you get back to the top side over here, a lot of short traders will once again be liquidated. You've come into the CME futures gap over here. Remember, we talked about the island reversal, an incredibly rare signal that we have never actually seen in Bitcoin's entire history. Many of the veteran traders out there will tell you that in their entire trading career, they've only seen this island reversal a handful of times, right? This is the first time in crypto. Simply what it is where price creates a gap over here, rallies towards the top side, and then once again gaps back down, leaving an equal gap through the middle over here. And that's exactly what we saw. The top side over here is your island. You've pushed into that gap, which was between $59,400 and $62,400, filling it. Now the question is, can you close above? Again, that's why it all comes down to that 62K level. If you can start to close above this level, then the bias starts to aggressively shift back towards the bullish side. In the shorter medium time frame right now, we are in resistance. So, okay, this is a resistance zone, don't get me wrong. And of course, we do have the death cross, the looming terrible death cross, right? That's going to be the 50 SMA coming down below the 200 SMA. Now, you can see over here, we've rallied into it. It often works like a magnet. When you get a bull cross or death cross and price is overextended either above or below, depending on which one you're getting, you often pull into that zone like a magnet. So the question is, what next? Because if you go through this thread, as this comment says over here, so maybe it's up or down. Cool, got it. Thanks, bro. But you have to use a little bit of context when it comes to this. Now, I would say that we are probably most similar to what followed over here in 2019. You can see you got the death cross down here. Price rallied into it, faded it. So maybe you'll fade it and you'll come down one more time, and then you reclaim over here. This, of course, led into the COVID lows, where we had the major crashes across all markets. I think from top to bottom, Bitcoin did like 65-70%. Had COVID not happened, well, probably it would have reclaimed over here and Bitcoin would have continued its climb towards the bull market all-time highs. So I tend to believe that we're probably following something like this, pull up into the death cross, maybe get a small rejection, come down, and then you start to reclaim those levels. So still holding, and then ignore this part of the COVID dip over here. You probably would have seen that continuation pattern over there. And I think that's the most likely outcome for what we're currently following. But that doesn't mean that you should be aggressively buying right now, because you could still experience a little bit of a pullback, right? We have had a big move up. We came directly into the 200 weekly moving average. This is going to be your 200 exponential, that being the purple one. And that's the part where I needed to be reminded to bring up the hash ribbons indicator. So good thing I reminded myself. Now, we're looking at the range level over here. From the top to the bottom over here, you have got back above the 50% level, which is very, very significant. So current short-term resistance, but below there is levels of support, which I want to outline. So that support level is going to be coming in between $58,000 and $59,000. 59.5 is going to be the 50% level. So if you do pull back into that, I think shorter-term traders are going to be looking to fill orders in that level. Now, what about the hash ribbons blue buy signal over here, which we spoke about? We said that historically what happens is when you get this blue buy signal, you shouldn't see any closing candles below the last local low, which is exactly what we got. This might be one of those anomalies due to the Japanese trade unwinding, causing a lot of mayhem. If you were to flip onto the weekly time frame, though, you can see over here you still have the blue buy signal, which also gives a pretty high hit rate. And on this chart, you haven't closed any candles below the previous local lows on the weekly time frame. So I'm going to give slight edge here towards the bulls, and I'm going to give the blue buy signal the hash ribbons indicator, especially given what we've just seen over here with Russia coming in and, of course, ruling in Bitcoin mining, adding towards that hash rate. I'm going to give them the slight benefit of the doubt and hold long and strong. that's my plan. That's what I'm doing. You guys do you, whatever suits you best. At the end of the day, we are coming into major resistance. We do have lower lows and lower highs. We can't deny that. But based on where we are cyclically, especially within the 18.6-year cycle, I don't want to be shaken out of any positions. So what I'm doing is cash that I have available, I will re-enter when it's much safer to enter into a risk on signal. And the current positions that I have, I'm simply just holding. As easy as that, right? I'm doing nothing. As easy as that. We can see there is also massive liquidity over here, stacked overhead. These are traders that are looking to exit the market on leverage, also short traders taking shorts right here at this level. And this is why I say, there is major resistance overhead, but you want to be looking down to that 58K region as major support as well. So it's going to be a quick trade towards the downside. If you do want to hedge against your HODL position, this is probably the best zone to start to build that short trade. And I'll show you how you can do that, right? So you got a lot over here. In terms of orders, you have currently 10,000 Bitcoin that are looking to be sold into this region over here in the form of leverage, which is absolutely enormous. This was, of course, dropped over here on Whale Room just before the show started. About an hour ago, we dropped that into Whale Room. Not only that, but you are also hitting the 618 and the 65 level, the golden pocket over there based on the range from top to bottom. We reclaimed the 50% level. We got above this resistance zone. Remember, that was the initial resistance that we were looking at. And consequently, that's why I say, if you were looking for a place for price to reject and you were looking for a short trade as a hedge, well, essentially that would be it, right? And then you could probably trade it back down to the wick over there, which is going to be back down to $51,000 should you get that continued chop. So it's up to you. If you are looking for that trade, that would be the trade that I'd be looking for. I'm personally more looking to buy the dip into the zone. You can see as price pulls back, you have reclaimed the 9 exponential moving average, that being the yellow one. You're also above your pivot level, which is at 58K now. And as long as price remains above that, it's angled towards the upside. I'll show you as well when we look at the 4-hour time frame why these are significant zones that I'm looking for. But this was previous resistance, now looking to flip into support. So I'm more of the opinion that I'm looking for something like that to come back down, refill, and then have continuation higher. And hopefully we get the weekly close above that $62,000 region. That's my plan. Let's continue on over here. If you look at Bitcoin on the 4-hour time frame, again, rejecting from the 200 EMA, which is crossed towards the downside. Move on to the hourly though, and you can see you've reclaimed those levels. And this is why this becomes a pretty significant zone. This was the order block that led to that big move towards the upside. And that currently is sitting at $59,000. So somewhere within this region over here, if you do come into the zone again to refill that area, you'll still be holding those moving averages. And I'm looking for support to be found anywhere within this zone over here between $58,000 and $59,000 in the shorter term. You do also have liquidity towards the downside in alignment with that, 58,400, and then a little bit lower at 56,400. So if price comes into that, expect a short-term reaction. This is for the lower time frame traders, right? And just remember this. You don't always get your perfect entry, right? As Web3 Quant says over here, markets are designed to keep the majority of people sidelined, keyword, during bull markets and keep them in full positions during bear markets. That is how most people get wrecked most of the time, right? So that means that most people will always be looking for a lower dip to get an entry. And if it's a bull market, the dips are shallower, price rallies towards the upside, and you get left behind. If it's a bearish market, the majority of people will always get their entry, and then they tend to hold those full-size positions all the way back down, right? So if you are looking to buy the dip, if you are looking to short the market, whichever way you decide you want to trade it, use Bybit, right? Why? Because if you do use Bybit, you can win a Cybertruck. Everyone seems to want to win the Cybertruck. I've been seeing reviews going through the roof here on the Cybertruck. A lot of celebrities now starting to receive their Cybertrucks. And you can see over here, you have 37 days, 5 hours, and 39 minutes left to participate. And this is fair game for anyone, right? You don't actually have to win a competition. They changed the model. They made it a raffle tick basis, right? So if you get a raffle ticket, all you need to do is have $1, literally $1 in trading volume. So use the link below, go over there, go to Bybit, click that, claim your up to $30,000 sign-up bonus, close the account, then come through to this link and click on that, and it will take you through to the winner Tesla. The more volume you have, the more raffle tickets you get, and then the better your chances are they're going to raffle it off. As mentioned, in terms of volume, I'm 18th, right? 18th on the leaderboard, and it's only 173 participants, which is nothing. So your odds are in your favor. Okay, let's talk about Ethereum. Big move on Ethereum. Look at that weekly candle, right? You swept the yearly open on Ethereum, coming all the way down to 2,129, hitting exactly key into that support, and since bouncing, nice and big bounce, right? 26% in 1 week is pretty substantial. You saw as well the ETH BTC chart, which has just been bleeding all the way down, putting in a little bit of a reaction move over here. And I would say yesterday was the day that most people were capitulating on ETH, right? So the question is, will ETH get continuation from this point onwards? Well, I think it is something that we do need to watch. The most important thing is we saw a big conversion from ETH into Solana. The whole timeline on Twitter or X was all about converting your ETH into Solana. So let's have a look at that particular chart. Well, if this turns out to be a deviation, that would turn out to be an absolutely terrible trade. Now, you have had a big move up. If you didn't do it yesterday, I mean, maybe give it a day or two. If this is going to hold, you're looking for something like this on the Sol ETH chart, right? You're looking for a bit of chop into this range high region, and this would probably be the zone to do it, which is going to be down at 0.05518. I will reserve this box over here. Within this zone over here is the zone where you expect the next high low to form, and then you'd want to see ETH BTC continuing, or at least, Sol ETH chart continuing towards the upside. That would be your next high low in continuation. But if you do start to take out, and I'll mark it out the exact level, if you take out this level, then you know big bull trap on the Solana bulls, right? And that would be this, right? Meaning that ETH was not the time to sell into Solana if you lose this level, which is going to be just one up over there. Let's put it there. 0.05389. Again, 0.05389. If you break below that level, you're probably going to do the full retrace all the way back down to the bottom over here, down to 0.04, which as a percentage is pretty substantial, right? We can showcase that 31% down. So watch this. This is going to be a key level. Mark it off on your chart. Look at the Sol ETH chart over here. Keep it marked off if you go to Sol BTC as well. Well, what you can see over here, big push towards the upside. This is major resistance overhead, which does need to be overcome, right? Sol is still my biggest position. I do have big ETH bags as well. I have big Casper bags, and I have big BTC bags. Those are my biggest bags, right? Definitely my biggest positions. And then I've also been allocating pretty heavy into the meme coin sector. And the reason why is that I want to do things that others don't want to do when others don't want to do it. When everyone wants to take that trade, I don't want to take that trade, right? Because I'm still playing in alignment with this greater model. So what are some of the coins that I've been looking at? Well, we up massively in whale room, right? These are some of the coins that if you took the trade with us on Monday, we are up on resistance cat. It's more than 100% because I've been looking at it right now and it continues to climb. There it is, resistance cat, that being one of them. GIGA Chad, we're up 80%. Popcat in whale room, we're up 97%. Boom in whale room, we're up 33%. Harry Potter, Obama Sonic 10, Inu in brackets ETH. That's the ticker. That is it, guys. Up 64%. When the cat on Solana, also up 20%. Of course, I drop all the charts over here in whale room for anyone that wants to see them. If you are wanting to see where price is going next, all of these look like they're cooking. It's only book of memes that I'm a little bit concerned about. I think we need to see a bigger push up, something like that drawing over there to get that one to start flying. When also a little bit lackluster, but nevertheless, absolutely pumping. Great meme coin trades over there. For anyone that wants to join into whale room, use the link, right? I think it's going to get to a point because the community is growing so much over there. I might start capping it and keeping it a little bit more exclusive because as the market explodes, I don't know, if we want to keep a tight-knit community, we might start to cap whale room, but use the link below if you do want to join while it's still open. Okay, continuing on, let's have a look at some of these coins. SUI needs special mention, right? Had a pretty big move up over here coming from the bottom of the range low, literally in one day alone, putting in a 43% move. So what now? Well, if it does fade this area, unfortunately, it is still lower lows and lower highs. That's the key level it needs to take out. Would I chase SUI here? Absolutely not. But I would look forward now the next high low. And the high low is going to come somewhere into this region over here at the 50% level. So watch as SUI, if it retraces over the coming days and weeks into 68 cents, forming a higher low over here, I think that's going to be a great zone where you can start to look for an entry. As for Solana, rejecting from this key level, but based on yesterday's candle, remember, all the previous day's candles give you a lot of valuable information. This is an incredibly strong candle. There's a chance that later on today, you see price trending above this level. This is resistance. Again, similar to Bitcoin. We're hitting resistance, but in the shorter term, the little pullbacks that you see later on today might get refilled, and then price attempts to go higher once again. Acceptance above this level over here at 165 will be really good for Solana. That opens up the new trading range where you can trade it back to 200, right? Otherwise, keep an eye out on that. Let's quickly double check Casper. How's Casper doing? Putting in also a 1.2% correction over here. Still looking good. Nice move over here. Anything that comes back down to 14.2 is a gift, right? 14.2. That becomes a gift for Casper. Okay, continuing. Mantra. Let's quickly have a look at Mantra. Okay. Also like this little order block that's forming over here. If you can start to gain acceptance above $1.02, yeah, you can look at continuation on Mantra. What about ONDO? Okay, ONDO, we spoke about the rotation likely going from ONDO into Mantra, and so far it looks to have proved to be correct. We were pushing down into the bottom of the range over here. Slowly look like we're starting to roll over, equal lows, lower highs, and boom, loses that level over there. So I definitely think at the moment, Mantra's taken the first ranking when it comes to the real world asset sector. That looks like the king at the moment. Okay, continuing. Let's see, what other ones do we have? Brett also putting in a little bit of move over here. I like this level. It's holding that. Just watch out for the resistance coming in at 13. GIGA putting in a 7% pullback now, but following an absolutely monumental move. Let's see, PONKE. PONKE also had a nice move off the lows over there, looking good. WIF, how's WIF doing? Okay, WIF reclaiming back into the range over here. 155 is an important level to hold if you do see WIF pull back into that zone. Okay, other ones to look at over here. Let's quickly see how's BONK looking. Okay, BONK reclaiming this level. Possible deviation of this trend line over here. Came very close to hitting the range lows. If, like that tweet suggests, that many people get left behind and it is in fact bullish, well, maybe BONK won't make it down into this pink box over here, but it's deviated, reclaimed this, and you're looking for that level to, of course, hold. Okay, Marga is also getting a nice push up over here, hitting that range low level. We spoke about this yesterday as a key zone. I did say because the momentum is coming pretty aggressively towards the downside, I would rather be patient. Even if it does spike up, I'd rather be patient and wait for a cleaner entry in the longer term. Okay, what other one should we have a look at? Let me know in the comments if there's anything particular that you would like to have charted. And then let's just quickly have a look at this as well. Remember with BitGet, guys, there is currently an offer only until the 31st of August. If you deposit $50, there you go. Make a deposit of only $50 or more. It's up to you. You can get $500 worth of trading bonuses for anything above $50. So sign up, use the link below, deposit $50. You have to use that link for it to work, and then claim your sign up reward. There's the bonus. It lasts 22 more days. Okay. Meme coins. Let's have a look. I want to talk about this one, RTR, right? RTR. This was a complete rug. Have a look at this over here. Look at this chart. I don't know if any of you got into this, but it came out yesterday. The speculation was, and what's the word again? Restore the Republic. Restore the Republic was the wording that they used for this particular meme coin. So from top to bottom, down 94%. absolutely hammered. How did this happen? Why did this happen? There was a lot of hype around this coin. It's been speculated that Donald Trump and his family are going to be launching something in crypto. This is coming from Donald Trump Jr.'s Twitter account. And I think I have it over here. Let me just have a look quickly. The TLDR of everything that took place. Let's quickly pull that in screen. There we go. This is what happened. Okay, RTR token launches, quickly reaches $100 million market cap. Eric Trump tweets about DeFi, sparking rumors that RTR might be the official Trump coin, right? A lot of big names started to come out endorsing it. And insider traders, if you look at that, Look on Chain identified that insider wallets making over 4 million from the RTR trades within 6 hours, of course, started to dump. Significant losses incurred. I saw somebody tweet out that they put $8 million in, lost everything, of course. This one account over here put in 900K due to FOMO purchasing at the peak. That money is, of course, gone. Eric Trump then came out on video on Rumble denying any official link to RTR and immediate insta-nuke, right? 99% price drop. 𝗕𝗫𝗅𝗍𝒬𝗓 is revealed to be behind RTR and not the Trump family. So guys, be careful out there. We were looking to take this trade over here in Whale Room as well. This is something that we were actually covering in Whale Room. And I basically told them over here that, you know, it's a 10 out of 10 risk. Here it is, $70 million market cap, 10 out of 10 risk level. I showed them exactly how I plan on entering in. And basically, what was the result, right? I planned on entering in only $1,000, very, very small risk, because we outlined that it had such high risk in Whale Room. We spoke about it. We said we're going to dollar cost average in, because usually if something is going to be a rug, it's going to be within the first 24 to 48 hours. The result, we only ended up losing $29 out of the $1,000. Literally 29 out of the $1,000 identified it was a rug. And then the other meme coins, of course, these have been our big wins, right? Much more wins than losses over there. One small loss, and then how many big wins? One small loss, and 1, 2, 3, 4, 5, 6, 7 massive wins over there for the week. So looking really, really good. Keep your losses small and let your winners ride, right? That is the name of the game. Okay, total 3. Still pushing up over here. Would love to see some closes above the mid-range. This is going to be your mid-range level coming in at 556. And then we're looking for a breach of that down-sloping trend line. Remember, this is going to take some time, right? This is going to take some time over here, probably a couple of months before you get back into the yellow. And then we're looking towards the end of the year, maybe to break out on total 3. And that's where your alts start to rally. For now, also, if you look at the trajectory that Bitcoin is following, let's just play devil's advocate and say it continues to follow this trajectory all the way into the top of the order block over here. Where would that put it timing wise? Well, at some point in September, you're looking at a major top over here on the Bitcoin dominance as it pushes into the range high, coming in at 58.75%. And then most notably, the biggest level that I'm eyeballing over here is going to be at 63%, which is your order block here that led to the breakdown. And then if it does somehow get higher than that, well, you do, of course, have this pivot level, which is downtrending over here. Now, if I compress the chart a bit more, you can see how this is a rising wedge over here. Very, very clear picture of a rising wedge, which usually has a bearish target, right? At the very least, you're looking 48. And if you get the full retrace back down to range lows at 39. So that would mean quite a lot of money, 31% down, big flow out of Bitcoin into the altcoins. And that usually does happen towards the peak of the cycle. So keep your eye out on that. And then that's it from me, folks. I will see you all on the next show, which is going to be tomorrow. And until then, trade well, and I'll see you on the next one. Cheers for now.